Welcome friends. Now let us see the amendments with respect to your refund chapter. A small amendment has come out in your refund chapter, a procedural amendment rather. There's an amendment in your proviso 2's rule 95 sub rule 3 clause C. So in rule 95 there's a small amendment that has come out. There's a proviso that is attached. Now what is that proviso and what is the impact? Let us understand. Simple proviso. Understand that when you talk about section 55 read along with rule 95, it talks about UIN, refund to person holding unique identification number, which means basically they are international organizations, right? So when these UINs are getting refund, they'll get the refund of the tax paid on inward supplies. Now the supplier who's giving them the invoice should mention their UIN number on the invoice, which means supposing I am an international organization, I am eligible to get the refund of tax paid on my inward supplies, on my purchases, Now the opposite party, the supplier, would have written my UIN number. Now it is highly possible that the supplier has not mentioned UIN on the tax invoice. So when I am going for refund as unique, as a holder of unique identification number, I am showing that invoice to the department, but the department is telling that your UIN number is not there. So what will be done is, along with the refund application, I have to give the copy of invoice duly attested by authorized representative of applicant. So along with the refund application that I am going to file in terms of your GST RFD 10. So normally UIN holder will just give refund application, so they will not give anything else. Now as the invoice, my purchase invoice, as a holder of UIN, I have to see my purchase invoice that should have my UIN. So these international organizations will not have GST IN, they will have UIN, but the supplier did not mention my UIN. So I have to produce the copy of invoice which is duly attested by the authorized representative of the applicant himself. So I have to authorize, I have to attest it, not the supplier. I have to attest it, telling that these are my invoices, these are my purchase invoices. Supplier would have already put a signature. Now in that supplier's invoice, in my purchase invoice, there is my UIN is missing. So along with the refund application, I will submit all these invoices of my inward supplies, that is purchase invoices or expenses invoices, and I'll attest. The applicant himself, the holder of UIN himself, will attest that these are my genuine purchase invoices, though the supplier has not put my UIN. These are my genuine purchase invoices. So this is the amendment that is brought in your rule 95, procedural amendment, and this is effective from your 1st of April 2020, not 21, 2022 rather. Now you are talking about certain other amendments or certain clarifications on refund. It has got nothing to do with rule 95. Certain other clarifications when you are talking about your refund. So there was a circular which is circular number 166 22 2021, total circular number being 166, but 22nd circular in 2021. Now simple clarifications. Now what is this clarification number 1 talking about? Supposing you are making a refund application for getting excess balance in electronic cash ledger, whether the time limit of section 54(1) will hold good, which means that if I have my surplus amount in electronic cash ledger, which is my amount, whether I have to make refund application within 2 years? No, because that is my amount, it is not tax. The time limit of section 54 will not hold good. Why? The amount which is there in my electronic cash ledger, it is not at all taking the color of tax or interest or penalty or late fees or any other amount. It is my amount, it is like a deposit. So I may take the refund of that cash ledger immediately, or after 2 months, or after 5 months, or after 2 years, or after 5 years, or after 10 years. It is up to me. So that time limit is not applicable when you talk about refund application of electronic cash ledger. Now the next question, related question. When you are taking the refund of excess amount in electronic cash ledger, whether any certification or declaration is required to be furnished. Again, understand this basic point that whenever there is any excess amount in my electronic cash ledger, it is my deposit amount that is with the government. So I can at any point of time tell that I want my amount back. So this time limit is not applicable. Forget about this time limit. The certification and declaration is not applicable. Nothing is applicable. Now, the third question is again a related question. I may get that electronic cash ledger surplus amount because of the opposite person depositing TDS or TCS, which means the electronic commerce operator deposited TCS in my account, or the government deposited TDS in my account. So, the opposite party deducting TDS or collecting TCS, I will get that amount in my electronic cash ledger. Supposing I am supplying through ECO. ECO will collect TCS, I will get the ECO will pay TCS through electronic cash ledger, I will get the TCS in my electronic cash ledger. Supposing I am supplying to government. Government will pay TDS by electronic cash ledger and I will get the TDS in my electronic cash ledger. This TDS and TCS is of GST. So TDS is for government contracts and TCS is for supply through ECO. So government and ECO will deduct TDS or collect TCS respectively and pay through electronic cash ledger, and that will come in my electronic cash ledger. Friends, understand that the moment it comes in my cash ledger, understand that it becomes my cash ledger amount. Again, a very simple thing, the moment it is my cash ledger amount, time limit is not applicable, no need of any certification or no need of any declaration, same point. Whether I get the amount in my cash ledger while depositing my own self, or I get the amount in cash ledger because the opposite party has deducted TDS or collected TDS and I have got in my account. So either I am depositing the amount in cash ledger or someone else has deducted TDS or collected TDS and it has come to my cash ledger. It makes no difference whatsoever. No application of time limit. There is no time limit for it. There is no certification declaration for it. So this entire three clarifications was all and all about electronic cash ledger. The fourth clarification which is given, friends, understand that whenever you are talking about deemed exports, the speciality of deemed exports, example, when you are supplying to UAE, it is deemed export. You have to pay the tax but you can get the refund. So when you are talking about deemed exports, either the refund of tax can be claimed by the supplier or by the recipient. So it is very clear. It is a very special scenario. Supposing I am supplying to 100% EOU, so it is deemed export. Either as a supplier I can go and ask the refund, or as the recipient the opposite party can go and ask the refund. Either or, not both of us. Right. Assume that the refund of tax paid on deemed exports is asked by the recipient. I repeat, it can be asked by the supplier as well as by the recipient. Now assume that it is asked by the recipient. Time limit point is that time limit for deemed exports in terms of your clause B explanation 2 to section 54, it tells that it is the date of filing of return by the supplier, or is it the date of filing of return by the recipient. Understand that for your deemed exports, supposing I am the supplier and the recipient is 100% export oriented unit. So this is one of the example, not the only example of deemed export, one of the example of deemed export. The speciality of it is either supplier can go and ask the refund or recipient can go and ask the refund. So first understand that GST would have been collected. So price plus GST would have been collected and GST would have been paid. So GST would have been collected and GST would have been paid. But now refund of that can be either claimed by the supplier or can be claimed by the recipient. It is either or. Now the question is, there's a time limit which is given. So the time limit which is given is this is the exact wordings that is being used. Clause B of explanation 2 under section 54 tells that in case of supply of goods which are treated as deemed exports, the time limit of 2 years will start from the date on which return is filed. Return relating to such deemed exports has been furnished. Return relating to such deemed exports has been furnished. Now, who will furnish the return of such deemed exports? Who is going to furnish the return of that deemed exports? Understand that only supplier will furnish the return of such deemed exports. So it is supplier's supply. So he is going to give the return of that deemed exports. Supposing it was in the month of April. This transaction occurred in the month of April 2022, and the supplier filed the return on say 20th of, rather will not take the exact date, supplier filed the return on say 18th of May 2022. So 2 years time limit. This 2 years time limit for claiming the refund, whether by supplier or by recipient. See, the point is pretty clear. If supplier is claiming the refund, 2 years will start from the date of filing of that return in which that deemed export transaction was filed. But if recipient is filing that return, the question was whether you should take the same date. Yes, you are not going to take the return which is filed by the recipient showing that deemed exports. No, you will not consider that. So whether supplier claims the refund, whether your supplier claims the refund or whether your recipient claims the refund, this 2 years time limit will start from the date when the supplier has given the return for deemed exports. So this is a clarification. Because this deemed exports will be reported or furnished by whom? Will be furnished only and only by the supplier. So only you have to see. Even if recipient, let us understand this, even if recipient is filing the refund, the time limit of 2 years will start from the date when the supplier has filed or furnished the returns showing that deemed exports. So that is the clarification which is given here. Now friends, let us talk about the amendment which has come in your appeals and revision. As I said, when section 129 was amended, a lot of things got amended. Rather, majority of the amendments that is there in the advanced GST level is only because of section 129. The amendments which are there in different places majorly has come out because of section 129. Section 129 has changed many things, including your appeals. Now, when you talk about appeals, normally if you see appeals, when you talk about your section 129, previously penalty under section 129 was different. General understanding was it was 100% tax and 100% penalty. Now they have said that forget about tax, it is 200% penalty. So normal understanding before the amendment, section 129 penalty was 100% of tax plus 100% of penalty. After the amendment, they have said that no tax, it is no tax, it is directly, it is only penalty, which is 200% of tax. So previously you were required to pay tax plus penalty, which is 100% of tax. Now you are required to pay 200% of tax, which means amount wise it is the same. So this was before amendment and this is after amendment. One of the penalty, not the only penalty, one of the penalty after amendment. And there were cases where there was only penalty also. So this I am explaining only the main penal provisions. So there were cases where there is no tax, only penalty when you are talking about exempt goods. So that also was the scenario. Now understand that previously when you talk about pre-deposit amount, right? Previously when you talk about your pre-deposit amount at commissioner appeals level, when you are talking about commissioner appeals, the amendment is only with respect to commissioner appeals level. So previously when you are talking about pre-deposit amount, it was basically your 10% which you have to pay. So 10% of tax. Assuming that your tax, let us give numbers now. Assuming your tax is 10 lakhs, penalty was 10 lakhs. Now penalty will be 20 lakhs. So amount wise totally it will be the same. So previously you used to pay 10 lakhs tax and 10 lakhs penalty. Now it will be penalty 20 lakhs. So previously you are going to pay, if at all you are going for appeals, you would have paid pre-deposit amount which is equal to 10% of tax, which is equal to 10% of 10 lakhs, which is 1 lakh. Now they have said that specifically for section 129, they have said that pre-deposit amount, this amendment has come out in your explanation to section 107 subsection 6, specifically for your section 129 penalty. So when an appeal is filed against penalty as per section 129, you have to, now there's only penalty, there's no tax, you have to pay 25% of the penalty for going for appeals. So now the pre-deposit amount is 25% of penalty. Friends, what is the penalty now? The penalty now is 20 lakhs. Previously tax was 10 lakhs and penalty was 10 lakhs, and pre-deposit was 10% of tax, which is 1 lakh. Now penalty itself is 20 lakhs and pre-deposit is 25% of penalty. Now 25% of 20 lakhs will be 5 lakhs. You can straight away see that there is an increase in pre-deposit amount. There is an increase in pre-deposit amount. From 1 lakh it has come to 5 lakhs. Friends, I am repeating that this is not the only penal provision. There are multiple, there are totally 4 permutation combination. You are taking only 1 permutation combination. So there are cases where there is only penalty when you are talking about exempt goods. So previously there was no pre-deposit, but now they have made pre-deposit. Right. So what I am trying to tell is, whenever you are talking about your section 129 appeals, you have to pay. If I want to put in simple terms, if at all you want to appeals against section 129 penalty, it will be, you have to pay pre-deposit of 25% of penalty. Normally, if you see pre-deposit provision, the percentage is only of tax. Normally, other proceedings, whenever you are for against other proceedings, if you are going for appeals, it is only percentage of tax. For all the other proceedings, it is only percentage of tax. Normally, for first appeals, it is 10% of tax. Second appeals, it is 20% of tax. Normally, it is only percentage of tax. Right. But now, for section 129 subsection 3 penalty, they have said that there is only penalty, there is no tax. So therefore they have said that you have to pay 25% of penalty. 25% of penalty. So whatever I have explained is given below. So before amendment, section 129 normally was 100% tax and penalty 100% of tax. So pre-deposit was only 10% of tax. After the amendment, section 129 only talks about penalty, which is 200% of tax. And pre-deposit as per the amended provision is 25% of penalty. So there is an increase, and I have explained the increase. So increase would be about 40% of tax value, which you can evidently see. So 1 lakh has become 5 lakhs. And understand that there were cases where there was no requirement of pre-deposit because percentage was only of tax. But in section 129 there will be only penalty cases also. For that also now you are required to pay pre-deposit. So understand dual effect. If there was tax and penalty, the pre-deposit was only percentage of tax, right? If there is only penalty, there was no pre-deposit. So let us understand this way. Under section 129, before the amendment, there was certain cases there was only tax and penalty for taxable goods, and certain cases there was only penalty before the amendment. And the pre-deposit was always, here the pre-deposit was 10% of tax, and here there was no pre-deposit. Now after the amendment, there is only and only penalty. There is no combination. There is only and only penalty. And whatever is the case, pre-deposit is 25% of penalty. So before the amendment and after the amendment. Before the amendment, section 129 had 2 combinations, one tax plus penalty, one only penalty. After the amendment, section 129 has got only penalty. Before the amendment, if it was the section 107, before the amendment, if it was tax plus penalty, then pre-deposit was 10% of tax. If there was only penalty, there was no pre-deposit. But after the amendment, there will be always pre-deposit. But friends, understand that this has come only at appellate authority. This amendment in section 107 has come only at appellate authority, which means if at all, let us talk about the amended provisions. First, you are challenging this penalty. So that is what is the penalty amount? Let us assume that penalty amount is 20 lakhs as per the amended section 129. As per the amended section 129. Now, when you want to go to the first appeals, which is appellate authority, and from there you want to go to the second appeals, which is appellate tribunal, right? A high court, supreme court, actually you have to pay the entire amount, not only tax plus interest. You have to pay the entire amount, entire penalty you have to pay. So I'm not talking about high court and supreme court, because entire due, whether it is tax or interest or penalty, anything, entire due you have to pay, right? So what is happening now? If at all you are going to appellate authority, pre-deposit will be equal to 25% of penalty, which is equal to 5 lakhs. When you are going to appellate authority, pre-deposit is only equal to 20% of tax. There is no amendment, so it will be only equal to 20% of tax or a higher amount. But here there is no percentage. This amendment has been done only in appellate authority. So pre-deposit at the second level effectively will be 0. So that is also an important thing that one needs to understand. So that is an amendment which is there in your appeals and revision.